Welcome to everybody to this afternoon's webinar on the custom impact of digital banking, featuring the TymeBank case study. I'm really delighted that today we've got three wonderful guests who are joining us, and I will introduce them shortly. But first, just a couple of quick housekeeping points. So we are recording today's session. If you do happen to have any internet connections issues, don't worry, we'll be sending you the recording hopefully tomorrow or latest on Monday. But more importantly, when we send you that recording, if you find today's webinar really interesting, please do hit the share button or the forward button and send to your colleagues. We'd love more people to watch the webinar. Also, just a reminder as well that we'd love to hear your questions. We have a Q&A function, which if you sort of go towards the bottom of your screen, you'll see it pop up there. If you could put your questions in there for the panelists, and we will try and involve them during our conversations today, or if not, we will definitely make time towards the end to cover as many of your questions as we possibly can. For those of you that don't know me, my name is Sarah Corley, and I'm Divisional Director at Digital Frontiers Institutes, and I run our webinar series. So I'm delighted to welcome back a guest we've worked with before, and two new faces as well to our program. So firstly, we have Ivo Jenik, who is Senior Financial Sector Specialist at CGAP. We also are joined by two of the team from TymeBank. We have Linda Appie, who's Head of Marketing, and Rachel Freeman, who's Chief Growth Officer. I'm very excited to talk through the case study that they've worked together on, which looks at specifically the customer impact of digital banking. So many of you, I hope, will have joined previous webinars we've run on what is a digital bank and the models of digital banking, which actually was one of our best ever attended webinars. So we're looking forward to today being a really great one too, actually trying to unpick what does a digital bank mean for the customer, and what does the customer experience seem like, and what impact might it be having on financial inclusion. So I'm going to hand over just quickly to our guests to give a brief introduction to themselves before we officially get started today. So Ivo, should we start with you?
Thank you very much, Sarah, and thanks for having me again and for organizing this great session. I'm very excited to be here today with Rachel and Linda. We've been working together for quite some time on the case study, so I'm very delighted to share the results. My name is Ivo Jenik. I work at CGAP, which is, as many of you know, financial inclusion-oriented think tank hosted by the World Bank. And I've been working on the intersection between policy and business models, looking into how digital financial services evolve into different business models, including in digital banking, but also how they are regulated and supervised by financial sector regulators. And most recently, I've been working on this digital banking topic, which I'm going to share with all of you today.
Thank you so much. Rachel?
Yeah, hi, my name is Rachel Freeman, and I lead growth at Time. Time is a digital banking network. We call ourselves serial bank builders. TymeBank is our flagship project in South Africa, and Linda will talk more about it, but we're really happy. We have just celebrated our 3rd birthday. We have 4.5 million customers and a very high, the highest net promoter score in South Africa for financial institutions, and some really happy customers, which are a lot in low income areas. So we fit right into the case study that Ivo wanted to do. We also, our second bank is called GoTime. It is launching this summer in the Philippines. We're working together with a conglomerate called JG Summit, which is a retail footprint, as well as a smaller bank, an airline, and some other companies, all creating a great ecosystem for a digital bank. And we are now hot on country 3. And once we submit the bank license, we'll go forward and be announcing where we're going to go next after that.
Exciting. Thank you, Rachel. And lastly, Linda.
So hi, everyone. I'm Linda. So as mentioned by Sarah, I am the head of marketing for TymeBank. So the first bank out of Time Global, based in SA, of course. I've been with the bank for about 2 years. Really great to be part of this awesome journey, and also the story of the bank. And I know we'll talk a little bit more about, why the bank exists and why it was started, but very great and humble to be part of a team that's helping to unlock financial access and to drive financial inclusion in South Africa.
Thank you so much. I'm really excited to have you on board the conversation today, and I think let's get started. So I wonder whether a really good place to start is just to remind ourselves what a digital bank is before we start launching into the impact. So maybe, Ivo, you can take us through what a digital bank is and the models and bring us all up to the same speed before we launch in.
Yeah, happy to do that, Sarah. For some of you, it might be just a repetition of, at least partially a repetition of what Peter might have mentioned before, but I think it's a very important question to really start with. And a question that we, frankly, at CGAP wrestled with a little bit at the beginning of this digital banking journey, because we very quickly realized that people are using the term digital bank in all possible ways. Some to describe anything between small payments institutions to a large international banks, some in a very specific way to describe a challenger greenfield banks such as Monzo or Nubank, and some to describe the traditional banks digitizing their operations. And so we knew that it was very important to have some sort of definition. And so we landed on a definition that may be not as precise as we wished at the beginning, but at least gave us something to hold on to as we were progressing with this. And so for us, digital bank is basically a licensed financial service provider that is allowed to take deposits from the retail mass market, intermediate those deposits, and offer payment services and account services to the customers. And I would just emphasize that intermediation part because it's really important. Capacity to really have a full balance sheet with deposits on one side and loans on the other side is what, in our minds, determines the bank. Now, where's the digital in all of that? It kind of becomes a less precise. We just decided that digital would be a bank that sort of drives its identity and value proposition from using digital technology. So, where do you draw the line is obviously a question, but it was good enough for us to work with this definition, and I think still is good enough for us to work with it. Now, what are the business models that we're seeing in digital banking? That was basically the first, I would say, then the second maybe question after the question of definition. And then we've arrived to 3 distinct business models that we thought were, and let me just try to make sure that I'm sharing this in the right mode. Hopefully you see the slide right now and you don't see my notes saying, don't forget to say hi to everyone. So we basically came up with those 3 models that we thought were distinct enough to call them really novel and emerging, and also did have potential for financial inclusion. So the first one, which we will spend most time talking about today because time is a great representative of that, is fully digital retail bank. It's basically a traditional banking model that uses heavily the technology to deliver cheaper, faster, and more convenient financial services or banking services to its customers. Then the second model is marketplace bank, which in a way is a banking response to e-commerce and fintech competitors in the form of one-stop shop for financial services that is created and curated by a bank. So we can think of marketplace bank as a website or app which allows customers to buy anything from insurance to wealth management products to payments and anything in between, really. And some of those products would be delivered by the bank that owns the marketplace, and some of those products would be just integrated from other providers and other financial institutions. So it creates a great economies of scope and scale, and also convenience for the customers who can now have one single place to go and shop for different products. And then the third model is banking as a service. It's effectively a combination of technology and banking license, and it's that sort of idea of creating banks as market utilities, where a banking license or institution with a bank license creates a very robust technological stack and combines it with its balance sheet and regulatory capabilities and offers this package to third parties who are interested in delivering financial services, banking services specifically, or interested in modernizing their own value proposition. So banking as a service often drives solutions that we see embedded in e-commerce, embedded in apps, embedded in non-bank financial institutions proposition like fintech companies. And so it's this cutting edge technology that is wrapped in the banking license. So those three business models are the ones that we thought were really novel and potentially inclusive.
So you mentioned potentially inclusive, and we also see, I'm seeing a keyword on under the fully digital retail bank that you've bolded out there, lower cost. So Ivo, is there a hypothesis that somehow digital banking might have an impact on financial inclusion?
Yes, there is. And in fact, there has to be hypothesis for CGAP to work on a topic that there is something to be said about its impact on financial inclusion. So our hypothesis is along four main aspects or features that usually determine whether a product or business model is inclusive or not. Or dimensions, I should maybe say, the dimension of cost, the dimension of access, the fit and suitability for the customer, and then experience. So, we call it by the acronym of CAFE framework. And it's a really framework that helps us to understand whether anything is potentially inclusive, be it a business model or specific product. And so our hypothesis about digital banking is that because of how the technology is used to, for example, design and deliver products, it can help lower the cost and thus help to overcome the barrier we typically see that prevents customers from using financial services and banking services in the first place, just making the services cheaper. And how it happens, I think we will we'll hear from Linda and Rachel how it actually happens, but it's by using the technology to create alternative distribution that's not dependent on brick and mortar distribution. And that lowers significantly the acquisition cost, obviously. But it's also the automation, including the automation of compliance and risk management through RegTech, for example, the heavy use of cloud computing and microservices. All of these things help to really decrease the cost of delivery of financial services. And if that cost saving is passed on to the customer, then we believe it will improve the financial inclusion. In the same logic, we also hypothesize about the access. Most importantly, the importance of using alternative distribution channels is really important. Reaching out to customers where they are, using the third parties, not only the brick and mortar branches and not only agents, the traditional agents, but as we'll see, grocery stores and other sort of merchant chains to reach out where customers live. That really helps to improve the access. And then I would combine fit and experience because it's all about how you can use the technology and the level of specialization that is now possible because of the technology to serve a very narrowly defined segments, including a very narrowly defined segments in the low income segment category. And that again should help to overcome the big challenge we see in financial inclusion, that products that are currently available are not necessarily suitable for the needs of low income customers. So, all of this is hypothesis. So I'm saying things like can, possibly, opportunities, but I think time and few other examples give us a hope that it will go that direction and there will be more and more digital banks and other players who can actually play on this opportunity and pass it on to the low-income customers who are excluded or underserved.
And you mentioned there, obviously we're going to talk TymeBank, which is, that's going to be the key chunk of the rest of the conversation. But Ivo, anywhere else we should look out for really interesting digital banking models?
Yes, so it's a global phenomenon, and I've prepared actually just a map here to share. It's a little bit dated, it comes from 2018, and it does not have only the pure banks that are licensed as banks, but also some sort of fintech and payments companies that label their services as digital banking, and it doesn't cover the higher income countries, but it just gives you an idea that we find pretty much everywhere in the world examples of digital banks or institutions that are offering digital banking services. So, in a way to answer the question, you can look anywhere and you will find something. But, speaking of time, that sets a really high bar in being inclusive and serving low-income customers. We did do, I think it was in 2019. It was certainly before the pandemic, the work started, because I remember I was still traveling. So we did do a series of case studies, and we included very different examples of digital banks. We included Kotak 811 in India, which is a sort of a digital, it's a digital branch in a way of Kotak Mahindra Bank that has helped them to really modernize the operations and double their customer base within a relatively short period of time. And then we included the Union Bank in the Philippines, which again is an incumbent bank, but incumbent bank that does a lot of different initiatives using digital technology that go beyond finance. They've created a space for micro entrepreneurs and small enterprises to actually set up their e-commerce shop, and also to create international value chains and to cater to customers, all around the world. They've created a crowdfunding platform that improves the SME finance. So all of these things are good examples. And if you go to cgap.org/fintech, you will find those case studies and other examples than Time.
Thank you very much. So now you've told us that Time sets the bar high. I'm really keen to bring Rachel into the conversation. And high praise indeed there, Rachel. I'd love to know, how did the idea for TymeBank begin, and what need in this market are you filling?
All right. Well, I mean, first to talk about kind of who we kind of aspire to be like. When people said which digital banks, we watch Nubank in Brazil very closely. Like when we want to benchmark ourselves, we often look at what Nubank is doing. And, in terms of all of our unit economics and all of that, we see them as the benchmark. So if you're looking for other ones, they're in Brazil, Colombia, and Mexico. So, also emerging markets. So for people who want to study about other digital banks. But yes, I mean, we're very proud of our partnership with CGAP. And, I've been working on different projects with CGAP since I joined Time 2.5 years ago. So it's a great relationship, and we look forward to, we have other projects planned. So this has been a long-term, like, we are committed to each other, and that we like to be researched, and we are very good about how we collect data. So it actually makes the research for different groups easier. It's easy to work with us. So Time started off actually as a fintech before it became a bank, and was doing mobile money for MTN and for telecoms. But one thing that our founder, executive chairman, says is that he would, he believes very strongly that people who've been on the fringe should not be giving fringe products that are on other people's rails. That if you're on the fringe, we want to be able to deliver products from our own license to be able to compete with the large banks. Like, our goal is to be one of the top 3 banks in the countries that we're operating in, not to be on the side working with low income, but to be a mass market bank and bring those people into the full financial system and have the same products and services as anyone. So with that, it meant that we had to get a bank license in South Africa. And so the bank license we got, actually at Time for a little bit, was owned by a large Australian bank, but then was kind of rebought by the founders and launched the bank in 2019, got the license back in 2018. So with that, we were able to start. We have a really interesting operating model. So when you read the case studies, it comes through. When people talk about digital, they mean often they say, oh, well, this bank has an app. Okay, an app is not a digital bank for us. Our back end is all digital. We don't have paper in the bank at all. We are very opposed to any paper. We never take paper from customers. We don't have any paper. So the full back end is digital. We have no middle office. And in the front end, which is where most people say, oh, we have an app, we actually believe that for a digital bank to work in emerging markets, you need more than an app. You actually have to really think carefully about how to manufacture that initial experience. So we also believe that people don't wake up in the morning and think, today I'm going to go get a bank account. It's not like, bank account is an enabling. It's not a goal for most people. So we needed to make it really easy and simple to onboard so that we become that enabler rather than the destination. And so we have partnered with retail stores, and we very much believe in retail integration for digital banks. So in South Africa, we work with Pick n Pay and Boxer, which are mean, Pick and Pay can have small stores in fuel stations up to large hypermarkets, the grocery stores. Their Boxer is more a big box store. And now we have a new partner called TFG, which is in retail fashion. And we have kiosks in those stores. You can walk in the kiosk and open a bank account in under 5 minutes. You get your own Visa debit card that has your name on it and you can automatically start using it. You activate it by going to the cash register in the retail store and can do cash in, cash out there. So we've turned the retail store into almost like a branch, but it's quite an effective way to onboard customers because they're already there and it's actually where they need to make a transaction. So we are integrating into the lives of our customers and making it really easy because people really trust the grocery store. And that was our way to manufacture that first engagement. And then we have ambassadors in the stores. The ambassadors don't help you open the account. You open the account and then our ambassadors do a lot of financial literacy training and teach you how to use an account. When you we believe that most people, when they open a bank account, you often go to a branch, either you fill out forms or a person sitting in front of a computer fills out the forms, and then they hand you their debit card and they hand things, and then they're like, great, here you go. And most people are like thinking, but I don't really know what to do next, or how do I even use the account? So our ambassadors show you how to download the app, how to send money, how to use this. And so we actually believe that we're the opposite of most kind of banks who are trying to go digital, and that they build an app and say, okay, we're digital because we have an app. We believe everything in the back should be digital, but actually we believe in touch. So as we have a kind of high tech, high touch approach to our customers. And we think that that's how we've been able to very effectively onboard customers in all age groups and all demographics, income demographics, racial demographics across South Africa. And we're taking that whole model with the kiosks, with the ambassadors, all of this into the Philippines.
And what products are you offering, to your customers as well, Rachel? And what are you, and are you going to take this? I had a good question here about, you said yourself, are you going to take the same model exactly into the Philippines and then to other countries? Do you feel like you've kind of, obviously within, learning over, I think you've cracked what could work?
So we have, and Linda can go into this in more detail, but we launched with savings products in the transactional banking. We were launching our first credit product when the pandemic hit, and we pulled that back and then redesigned that, and now have launched a buy now, pay later product with our retail stores called More Time. We also, like, when you go into the app, as well as these different products, which we manufacture ourselves, we have a number of third-party products like insurance that we offer. We also offer, if you can buy something digitally in South Africa, you can do that inside the app. So if you want to have Spotify or Netflix vouchers, pay your electricity, all of these different things that people do, that is, you can do that all inside the app. And we also have a card. We very much believe that a debit card and card transactions are important, and that people like using cards. It's a great piece of marketing, and we're going to keep doing that. We have other products that we're developing. We're actually moving this year into more sole proprietors. So we're more consumers and had a small group of sole proprietors. We don't have full SME accounts. We just have sole proprietors, and we have a number of products and services that we're going to be launching for them this year. Of course, you cannot take all of this and just subplant from one market to another. So we've done a lot of work in the Philippines as to what are the products and services to launch with. It will include the same savings and transactional banking. More Time, we are thinking of how to do different things. There it's going to be a play more with loyalty points, because the partner that we have, so we have the equity partner, which is the majority partner for GoTime, has a very large loyalty across its different businesses. And so we're integrating very closely into the loyalty program. We have that a little bit in South Africa, but it's going to be much larger focus in the Philippines. And in the third country that we're looking at, it's much less, in some ways, developed. The financial sector is much less developed than South Africa or the Philippines. So we're actually going to be doing a lot more in terms of with sole proprietors, with people with home-based businesses, kind of IT gig workers. So it's going to be quite a different approach there. But again, we're going to bring the kiosk. Some of the fundamentals we keep the same, but then we tweak how to actually engage the customers.
Perfect. Talking of customers, maybe that's where we can come over to you, Linda. Obviously you said you've got a really good, interesting, dynamic of customer from everywhere. But can you tell us a bit more about your customer base and what makes them, what is financial inclusion like in South Africa?
Okay, so from a customer mix point of view, I mean, traditionally, just based on our mission as well as our purpose. And also, if you look at what we offer from a bank point of view, which is really a check account that has no monthly fees, what that then has done is actually attracted customers in the lower end of the segment or the lower end of the market, which is great because, like I said earlier, the bank's mission is around financial inclusion and access. And then secondly, because of our savings product, which is called Goal Save. So this is a savings product where people can get immediate access to their money. They don't have to put in or have to be limited by a minimum amount that they can save before they start earning interest. And also they earn up to 8% interest, which is arguably the highest rate in the market for such a product. So what that has done is that it's also attracted people from the middle to higher income segments in the market, people who are tired of the frills of I guess traditional banking and even private banking, and also who are just looking for a savings product that delivers. So by virtue of that, yes, we've got a very strong penetration in the lower end of the market, but also good penetration in the middle to higher income segments. And for us, we don't limit ourselves. We're a bank for everyone, specifically the middle income segment of the market. And I think with everything that we've done in terms of the increase in products that we've launched, as well as the features, what we've done over time is, yes, if you're a customer who falls in a specific segment, you may feel that the traditional account is all you need in terms of your needs. But I think in terms of the portfolio of products that we've had, which is the buy now, pay later product that Rachel spoke to, which is more time, and also most recently our credit card, which we launched in January. I think that in itself allows us to compete as a fully fledged bank offering that then allows a customer who might be in the middle or even higher income segments to start looking at us seriously as a bank to switch to.
Brilliant. I mean, 8% that's in savings is really impressive, and yeah, some great products there. Thank you for expanding my understanding of all the different things that you offer, but also who your customer base is. So I guess my next question, I'm going to put this to Ivo first and then come to you, Rachel. So Ivo, why did you want to collaborate with TymeBank on this research? I mean, you've said they set a high bar, but is there anything else that you would share with us on that front?
Yeah. And by the way, we lost Rachel to the chat because there's a really vivid discussion happening there. So keep it coming. A lot of questions, a lot of interesting comments. Why did we work with TymeBank? So I should first say that we did not only work with TymeBank, we actually knew from the very beginning, starting the digital banking work, that we want to pick a few of those new digital banks that we thought were interesting because operating in interesting markets, but also because showing us signs of being really inclusive more than others, and just study them in detail, just see exactly how they do it, what is their secret, what kind of technology they use, because let's not forget that we're really talking about digital component here, that sets them apart from traditional bank in the first place. So what it is that we're talking about. And as we were doing the landscaping, as we call it, and I showed you the map of how many players we went through, TymeBank clearly appeared on our radar screen as one of those players who, from our understanding, were very serious about financial inclusion and were committed to use the technology and all the cost savings and capabilities that the technology offers to serve the lower income customers. So we reached out to the co-founder, Koen Jonker and Rachel, and started the conversation. And it turned out that it was a good choice. So the first wave of research we did, that included the Kodak 811 and Union Bank and other bank as well, we included time and look at the business model and the technology. We just try to understand how they make money, what kind of services they offer to customers, what kind of technology they use, and how. We obviously dedicated a lot of time to the question of kiosk, how that onboarding happens, how do they make sure that it's compliant with the AML CFT requirements, for example, how do they identify the customers remotely, and all of that was very fascinating. But then the next logical question we had was, okay, so it's cool, they're doing cool things. Does it have really impact on the low-income customers? Does it really help to advance financial inclusion? And so it was just a logical extension of that first wave of research to try to answer that question. And again, in the partnership with TymeBank, which allowed us to analyze their data, their customer data, but also speak to their customers. So I think it was just a logical next step on the journey. And again, we did it with TymeBank, but we're doing a similar work with other financial service providers as well.
Thanks, Ivo. And I'm going to pose that question to you, but what makes CGAP collaboration important for TymeBank? But also, I know a couple of people have asked already about how do you do eKYC. So maybe while we're here,
okay,
talked about that, we could answer both of those questions.
Okay. So first, I think I was at IFC, which is a part of the World Bank along with CGAP for 17 years. So I'm a good friend to CGAP, and they were a good friend to between us, we did lots of work, and I was working on financial inclusion the whole time. So, it's not like we got in time, there was a relationship, and Ivo and I had worked on different things while I was at IFC. So it was quite an easy thing to start up. And so also our data, we have a lot of really, like, our ability to track data is quite high, and to decipher data, to look how we think about data. And so it means that when we're doing a project like this, actually it's easy for us to be able to pull the data. And so, as well as working with CGAP, we do a lot of work with the Financial Alliance for Women, Women's World Banking, because we started doing sex disaggregated data from day zero, and we have good insights that we can always share about how men and women use the account differently. So it makes it so that if you're doing research, we actually are a good partner because we have the data and we can give it to you in a clear way. So that's kind of why, and we like doing this because, we know ourselves that we're working with low income, but we learned things from the research. And we did in this research, it was just using our data, but also doing a lot of kind of customer insights and interviews with customers and conversations with them. And we kind of learned things that we need to work on. Like one thing was call center and improving our call center. That was a very tangible thing for us to work on. So we get a lot out of these partnerships. Okay, so eKYC. So the kiosk, like when you look at the kiosk, it looks quite simple, but it's actually got a lot of things going on. So when you go up to the kiosk and you put in your South African ID. And as you're doing that, the kiosk is taking pictures from every way of use, and then takes those pictures and then sends that plus the South African to all through different APIs to all these different bureaus, and does all this eKYC and AML checks while it's all happening. So since the systems work quite well and the kiosk learns quickly, the kiosk is able to do all of this in 3.5 minutes. And that's one of the core technologies that we created first, was how to do this through the kiosk. So we can do a lot of checks. And of course, it's much better than just having a manual check. The banks used to do manual checks. Our kiosk is very good. And our kiosk doesn't just speak English. Our kiosk speaks, Mandarin, and our kiosk is able to use many different languages. We trained the kiosk. Mandarin was quite easy, but the kiosk actually can read Arabic and like cursive Arabic as well. So that took 3.5 months for the kiosk to learn how to do that when we were thinking about going to Egypt. So with that, the kiosk has a lot of AI and a lot of different things going on in the background. We have the kiosks which are in the stores, which are full standing, and some of them are quite large, but we also have mobile kiosks. You can take it on a motorcycle. You can take the kiosk to different employers, sign them up. I think there was a question of how do we think about different markets? Well, the kiosk is a specific, when we have the kiosk in South Africa, we actually had to change the dimensions of the kiosk because in Philippines, there are a lot of floods. It's, a very typhoon-centric area. So you had to increase, like how the kiosk was, you had to make it slightly shorter, as well as raise it up so in case there's a flood in the retail store. So there are different aspects even of that, of how we think about where to place the kiosks and how to build them for different markets.
Sarah, I suggest next time you interview one of those kiosks for the webinar.
Yeah, and one of its languages it speaks. Yes.
Brilliant. I mean, I'm so impressed about hearing, the technology. I mean, it sounds phenomenal, and all the thought that's gone behind it as well. I mean, it's really, really interesting, and I can see the questions are flying in the chat. So I'm going to a few more.
Oh yeah, and
start picking
also
up
on the kiosk. So a lot of people then write us and say, oh, who's the vendor or the manufacturer? So we manufacture them ourselves. We're going to be manufacturing in South Africa as well as Taiwan. Right now, they're all manufactured in South Africa, in our own kind of manufacturing operation.
Brilliant. So I want to loop Linda back into the conversation to get that to sort of share really what were the key findings and what impact has TymeBank made in South Africa. I think that's what we're all looking forward to hearing.
Yeah, no, I must say it's been quite a humbling experience, because and I've seen some of the questions come through where some people are saying, as a digital bank, to have a specific purpose like the one we have, it works from an impact point of view. But I think for us, it was very important in terms of this collaboration to be able to quantify that impact and to be able to say with confidence that the bank has actually made a visible difference in people's lives. So just in terms of, the results of the study, so what we saw was that 73% of customers, they actually reported a very positive change in quality of life. And one of our values is to simplify banking, not just to make the access to it simpler. And I know, as Rachel was talking earlier about the kiosk, what we do is we actually bring that across in terms of how we speak to our customers, and also in terms of the use of the language in our adverts. Because what we don't want to do is actually talk down to customers, but what's more important is to make banking less intimidating, and to have it presented to them in a format or language that they understand. Also, just going back to the results, 73% of customers reported there was actually an increase in their savings balance. So this is linked to the savings account, or rather the savings pocket Go Save, which for them was a vehicle for them to achieve their financial goals. 32% of customers cited an improvement in financial resilience. And then also, what was very key for us and very encouraging is that 80% of customers reported a decrease in the amount spent on bank fees, and 31% reported an increase or improved access to financial services. Also, which was also good in terms of the impact of digital channels. So about 51% of customers reported an improvement in their ability to transact, and about 55% reported an increase in their ability to receive money digitally. So yeah, very, very, very encouraging results. Yes, the study, had a skew towards the lower end of the market, but what I always like to emphasize is that as a bank for everyone, these are benefits that all our customers get. And for us, it's about taking all our customers with us on this journey around the purpose of the bank.
Sorry, I'm on mute. That was some very impressive statistics there. I mean, 73% reporting a positive change in quality of life. I mean, I'm not sure that there are many other banks around the world that could sort of say those statistics. And I think it's important to remind ourselves, and when you think about financial inclusion and people being banked, that actually just having a bank card is not, it's a way we measure something, but actually doesn't mean anything about financial inclusion. But yet what you've shown with us and shared with us today in those statistics, we're really beginning to see that actually it's improving people's lives, being able to have access to banking at a more affordable rate. I mean, 80% paying less than they perhaps have had before is significant.
Yeah, definitely. Very, very, very encouraging results. And I think for us, it just pushes us to do more and to do better. And to the point that Rachel made earlier around, increasing our scope in terms of partnerships. And I saw there's a question here around, first of all, how do we allow people, in the rural areas who are perhaps not as digitally savvy to get access to our bank account. And I think that's actually what drove the partnerships with the retailers, which is, let's have these kiosks. Yes, the kiosks are high tech and high touch, but also let's have ambassadors who are recruited from the communities in which the kiosks are located to be able to help customers transition or to actually give that financial advice that our customers need. And I think it's in line with improving the number of touch points or the number of points at which people can open bank accounts that we then went with the partnership with the Foschini Group, because that allows us to have an additional 600 kiosks, and that also widens our network in terms of being able to reach more people.
Which, if I just may on that, we in our research we found that this translates into a 5 percentage points difference in how the most excluded segment in South Africa, which is a young, low-income women living in rural areas, is represented in the customer base of Time compared to what is estimated the average in banking sector in South Africa. And while some may say that 5% is not a significant number, I would argue that it's pretty significant when we look at the big picture and how hard that population is to be reached. So I think it's very, very important. And the other point I'd like to just emphasize from what Linda said about that 73% of people reporting a positive change in their lives, a lot of that was attributed to the capacity to save and achieve the goals through savings, and also build resilience against economic shocks through savings. And I think that's something that we are particularly excited about at CGAP, because our vision and understanding of financial inclusion is financial services being just a vehicle for people to be able to seize economic opportunities and build resilience. And that happens through many different means, but savings is one of them. And so it's great to see that Time was able to offer a product that actually allows people to save. And it's not only the high interest yield that they offer, but also the structure of how that interest yield can be achieved, and the nudges and sort of the behavior play that is embedded in the product design that helps people to be more disciplined and save more. So I find that very promising and positive finding.
Thanks for highlighting it. I think it's really interesting what we think about. We think about the payments aspect, how easier we've made it to send someone money or receive money. But actually, as you say, looking at the bigger picture, that kind of financial resilience, particularly, I mean, gosh, we're still in that period of recovering from COVID, and now we have other issues happening around the globe. Financial resilience actually is proving to be incredibly important, and something we really need to keep an eye on. I'm really keen to say one thing that I was reading the case study, and I found it really fascinating. But the other thing that really fascinated me is when you ask them what customers what you would like to see differently, or how TymeBank could improve. And one of the thoughts that came back from customers was physical branches. Now, obviously that's not what you're about, and I did have a little giggle because sort of actually what is how do you deal with that? I mean, obviously the answer is not to go around setting up branches, but what are you doing to try and, I guess it comes back to customer interaction and customer service, right? What are you sort of learning from that feedback?
So I think, one thing that came back was on call centers, and we are enhancing that. We are putting out, we've gone into we have a new retail relationship that Linda talked about, the Foschini Group, which is a fashion retailer. So quite different than the Pick and Pays. And so that's going to be a different way. I think we are, and it was kind of like, okay, then do we need to enhance the ambassador aspect and do that, and also use more going to employers? So, but the end is that while they say, some people may say they want to have a branch, we're not going to be building brick and mortar. Our, so we have goals that we have set for this year. And one of our key goals for the year is to break even in South Africa. So we break even in 4 years from launch. And if we start building brick and mortar, that's end of break even. And break even, we think it's really important to prove that a digital bank can break even in a certain time period. So that's a big focus of where we are right now. But I mean, I think, in time we have kind of core beliefs, and I think those come through a lot. And that's how we were able to think about this. And one of those is that we believe you can only walk from where you stand, which is kind of obvious, but it means that like we work with people wherever they are in their digital journey. So if they're at the beginning, we work with them from the beginning on. If they're halfway through and they're more, we call them digitally savvy, we can engage with them at that level. But we think that, for us, actually, every single customer that we have, no matter how kind of low income they actually are profitable. So all of our customers are profitable for us. And that's because we engage them where they are and walk this path with them.
I'm really hearing that commitment to, like you say, in our conversations here, to financially walking that path with your customers. That's really, that strategy is really, really coming through with what you've shared. How would you, Rachel, how would you share your learnings with others? If anyone else is on this call that's thinking about, I don't know, but going to work with a digital bank or form a digital bank, what sort of piece of advice might you give them? Or pieces, probably.
So one thing is that I think there are fundamental differences between digital banking in developed markets and emerging markets. So in developed markets, you can actually develop a digital bank and have it do just a niche grouping. Like you can become, so we call that kind of, the millennials in London, you can have a bank that just services them if you're in the UK. Okay, in emerging markets, it doesn't work that way. So you cannot have that kind of niche thing. You have to work for scale. And so there are different things that you need to do in emerging markets. So one of the things that we spend a lot of time educating people that talk to us is about kind of those differences. And then the other thing I think is that you're not, like, for a lot of the countries that we operate in, maybe less South Africa, but definitely in the Philippines ones, you're not competing, you're competing against your incumbent banks, but you're competing against cash. Okay, so, and that people will only trust a digital bank and move to a digital bank if they know that they can actually convert to cash. And so being able to do that in the grocery stores and actually do that cash in, cash out very easily in many, many places gives people confidence that they can go into a digital bank. So rather than thinking, okay, let's get them quickly into the digital world and they're going to only be there. Customers don't get to decide whether they're going to be digital or not. It's the people you pay, the merchants, whoever you're paying decides how you're going to pay. If they don't take Visa, you cannot use Visa, no matter how much you want to use it. So, in emerging markets, there's a lot of cash, and thinking how to allow people to still have cash. When I'm talking to my family, where we're discussing the situations in Russia and Ukraine right now, and we talk about, because Tinkoff was one that we were watching in Russia, but for those people who are now having a lot of issues, they need to be able to get into cash. So no matter what you have, being able to go quickly back and forth is a fundamental need for a digital bank in an emerging market. And so trying to work just on the digital world and stay there, while it may be a goal, isn't a reality. And so that's a lot of what we think about, is enabling that type of trust, and being so that people can trust us to be digital, because they can always go backwards too.
Customer trust is really key, especially as you say, for those who are just coming into the world of being digital and going and banking as well. Incredibly important that they trust the product. And Linda, as well, I can see in your comment that you just made there, the education of financial literacy is going to be a key component for along that digital journey too.
Apologies, Sarah, what was the question?
I was just talking about how the importance of financial literacy and education that goes along hand in hand alongside not just giving someone a card, but actually helping them, encouraging them, and how to use that.
No, definitely. I think as a bank, as I was talking earlier, so yes, it's about the purpose. So unlocking financial inclusion, but that goes further than that. So that comes with the responsibility that not just TymeBank has, but actually all banks have, according to the Banking Association of South Africa, in terms of being able to better educate customers on the banking products that they use to unlock their financial health. So, you know, this for us carries through, as I mentioned earlier, in terms of how we communicate, but also in terms of being able to drive that education, not just about our products, but about banking in general. Last year, as part of Savings Month in July, we actually had a campaign called Save What Matters, which yes, focused on, you know, the role of language in banking. And what we did, you know, as part of that was to actually on our website include a glossary of banking terms in all of the official languages of South Africa. And these are, you know, interventions or things that we plan on doing and upscaling as a bank as we go.
And, you know, it's there was one of the questions that came out in the chat, you know, is financial literacy, is it the cost of it worth it? But clearly we're hearing it's worth it because we are knowing that 73% of people had a change in the quality of life, but B, we're also hearing that you guys are going to break even and then move into the world of making a profit. And many people say, you know, that lower income actually is not profitable, but obviously at TymeBank you are actually proving that is not the case. If you invest in your customers will also, you know, invest in you as a product, right?
I just say,
but we're trying to be mass market. I mean, we don't just have low income customers.
Yeah.
So we have a wide, like, so, you know, right now we have customers, we have grant recipients, so like government to payments grant recipients, one level, and we're moving into this new with partnerships with the fashion retailer. It's a little bit more upmarket than with Boxer or Pick and Pay. So our goal is to be, you know, in the top 3 banks in South Africa, which means that we need to be serving the whole market. And so that's, you know, so it's not just low income, but what we do is that low income people have just as many access to products, and it's designed to help them as any other income. And so by making it accessible and kind of making sure that it's emotionally, physically, and cost accessible and cost-wise accessible, means that we can serve all of South Africa.
Thank you, Rachel. And Ivo, I think you were going to
I just wanted to emphasize one aspect of that financial literacy. It might be clear, but it might not be. And I see that this point coming up in many discussions. You know, I think what is important about what Time is doing is that it's not the education that sort of assumes that customers, you know, don't know what they need or want. And it's not that education that's just sort of really marketing. It's an education that is driven by the momentum created by the value offering, right? So it's the Time is creating something that is actually meaningful and customers see the value in that product. And so then, because you get their attention, you can start sort of explaining a little bit more about, you know, how to use it and what is sort of the behavior that will get you to your goals and how you can save. But to my mind, this is a really important distinction between what many understand under the term of financial literacy and what Time is actually doing. I would even refrain perhaps from using financial literacy. It's just giving the customers the value and adequate tools that they can meet their needs, because they usually very well understand what they need.
So we've got 5 minutes left. So what I'd love to do is just to sort of spend the last few minutes, and we've had a number of questions come in as well. I hope we've answered as many as we can, but I'd just like to gather your final thoughts before we close today's session. And I feel like we can talk forever. So anything that you haven't covered yet, or that you'd love to share more about, you know, what you're really proud of, and also what what you're hoping that this, by sharing your example with everybody on the call today, what are you hoping that people feel inspired to do? So I don't know, shall we start, Ivo, with you?
Yeah, one hope that I have is that we'll be able to collect more evidence, perhaps across different business models, to really demonstrate that it is not only a hypothesis and theoretical possibility to use technology to serve lower income customers and to advance financial inclusion. I hope that people will take a note that you can actually build a profitable business, which, if not primarily built on, definitely includes lower income customers and brings the value both to the customers and business. My hope is that people will take note and follow the same path, or get inspired and think harder about what they can do for lower income customers, because the opportunities are definitely out there, and the capabilities and technology are out there as well. So Time is hopefully one in a series of examples that we can put out there to inspire others.
Linda, I'll come to you next.
Yeah, I think from my side, I think, having a bank such as TymeBank, has been disruptive in the South African sector. But I think the real winner here is actually the customer, because the improved competitiveness, has led to actually more choice for the customer. And if anything, I would encourage customers to shop around. If you're shopping for a bank account, a savings account, do your comparisons, do your shopping. I think from a TymeBank point of view, yes, what Rachel was saying earlier around, we're not just an app. People are able to access our banking, services. Yes, they can open an account at the kiosk. They can also use it as a service point. They can open an account online on our website. They can do internet banking. But also, yes, at the time, that the study was done, we had just launched our USSD channel, and at that time, what we were providing was the send money option. But over time, in line with being able to have services across different digital channels, that USSD service has grown to the extent that we've launched additional features on there. And I know one of the improvements that was being recommended on the study was the ability for people to check their balances, which we've brought to market. People are able to buy electricity, VAS voucher, value added services vouchers. They can buy airtime. They can even open, a goal save account, which I think, just by using your cell phone outside of shopping hours, you can actually still continue with your banking, even at any level in the market. And for us, that's encouraging. And I think what we also try and do, even from a credit point of view, is also have alternatives, safer credit alternatives, and which is why we have the buy now, pay later product, which allows people to do exactly that without necessarily getting into credit agreements.
Wonderful. And lastly, Rachel.
Yeah, so we've talked a lot about kind of our approach and partnerships, but underlining all of this is kind of a very collaborative relationship with the regulator. So if you're going to be doing digital banking and with a full banking license like we have, it's a very deep partnership with the regulator. So there's a question about why the Philippines, and the Philippines had developed a really interesting regulation for digital banks. And we're working very closely as we're getting close to launch there. Similarly, we have a very close relationship with the Reserve Bank in South Africa. We were the first bank to get a license in 20 years. We're the first bank to be operating on the cloud in South Africa. We're kind of demonstrating how to work on the cloud in the Philippines. And so that piece is really important to the model working. Without a regulator that believes in cloud, without a regulator that's thinking about national ID and how to use that, this model doesn't work as well. So that's a very important part. When we screen any country of where to work, that's the first place we start with.
Great point. Thank you for reminding us, Rachel. Our regulator community, I hope we're listening, and that we can have some conversation, and this inspires people to understand about what benefits digital banking can really bring, that we're not talking about just banking more products for the already banked, but actually bringing new customers into the market, going to where they are, and trying to introduce, like you said, as many use cases for them as possible, for them to use that that money and set, digitally, save digitally, but importantly, like you said, Rachel, to be able to trust that cash and they can cash out when needed as well. It's been an amazing hour. I don't know how the time has just disappeared. Such a fabulous, interesting discussion. It's so nice to kind of unpick the real world versus, the theories that are out there and the hypothesis around that you shared right at the beginning about how a fully digital, retail digital bank can actually make an impact on financial inclusion. Well, I'm really excited that from TymeBanks we've seen that happen, and I really look forward to seeing that happen in other countries and see others embark on this similar journey towards greater financial inclusion. Thank you so much, Ivo, Rachel, and Linda. I've had a wonderful hour. We've had a lot of participants, so many questions. Sorry to everybody that we haven't managed to get around to answering your question, but we will be sending a copy of the recording, all the links to the research as well, and we'll be able to connect you with each other should you wish to reach out to Ivo, Rachel, or Linda as well to ask more questions. Thank you so much, everyone. Have a wonderful afternoon, morning, evening, depending on where you are. And I look forward to seeing you all on a webinar soon.
Thank you, Sarah. It was a pleasure.
Thank you so much.
Bye.
Bye.
Bye.